Hello Mavericks, Imri here with today's currency recap. It is Thursday, August 17th. Well, it was a spicy day in the markets, that's for sure. Let's get right into it. So we're going to be going over the trading day as a whole, taking a look at any meaningful news that may have come out. We're going to take a look at the broader equity markets as well as some major commodities. We're then going to conduct some technical analysis on the major indices, on the currency baskets, and then look at any upcoming major news events to close out the week. And then finally, we're going to be taking a look at some trading setups and opportunities. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill of every profitable currency trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. So if you're a technical trader with a technically based trading system, we want to meet you. So click the application link in the description below this video. Now let's break down today's market action. All right. So breaking down today's market action, we're going to kick things off with news of the day. So not too much in terms of meaningful news. Walmart had earnings. I guess you could say that was definitely meaningful on the stock side of things. But the bottom line is that the stock market continues to slide and the 10-year yield has hit its highest level since October 2022, certainly stoking fears that the Fed is not yet done raising rates to fight inflation. In terms of performance, we can see that the S&P was down, crypto way down 3% today, gold down as well, oil holding its head above water, up almost 1%. In terms of currencies, the yen is finally showing some signs of life, which is certainly interesting. The Swiss franc did fairly well today, as did the British pound, and then we had our biggest loser as the Australian dollar, followed by the New Zealand dollar in second place. In terms of cryptocurrencies, Ether really leading the pack lower today, down almost 4%, Bitcoin down 3%. So things are looking a little bit sketchy in crypto land. That's something we can talk about when I go through my charts on TradingView. In terms of giving the market a rating, we're at -2, how fast things change. We're below both moving averages, and the slope of those moving averages is looking a little suspect, with now the 20-period moving average starting to slope lower. Okay, taking a look at the S&P 500, I dispense with the channel that I've been tracking with you guys for a few weeks now. We've already hit the upper boundary line of that channel, and we're coming off now. I've highlighted the support level at 43.28. I'm not saying that that's necessarily going to hold the market to the tick, but it is an important swing low, and we should be keeping an eye on it. It's certainly possible that we do find some support there, bounce a little bit before heading a little bit lower. But as of right now, there's nothing to suggest that the market has found a bottom and is trying to recover. To close out the week in terms of news, later this evening, we're going to hear from the RBA governor. That's Governor Lowe. And then early in the morning, there's going to be GDP quarter over quarter coming out of, month over month GDP coming out of Great Britain. And then tomorrow morning, 8:30 a.m. Eastern time, we're going to get some inflationary data out of the US, core PPI and PPI. And then an hour and a half later, we're going to have preliminary consumer sentiment reports. All right, now moving on into currency analysis. In terms of velocity, we have the yen at +3, the Swissy at a +2, and then on the negative side of the scale, you can see we have quite a few of the cryptocurrencies, but also most notably the Aussie, the Euro, and the Kiwi. So that's going to make for some interesting viewing now as we dive into the charts and see what's going on. So the New Zealand dollar broke down. I've been talking about this currency just being very weak for a few weeks now, and we still have a little bit lower to go before we're in what has historically been former strong support. Last time we traded in these levels or around these levels was in 2022. If we push a little bit lower, we're going to reach that 2022 base. And I think I think at that point, New Zealand dollar bears have to be very cautious because you can see how we just sprang up off of that floor very aggressively back in 2022, and a similar story here in May in 2020. So entering what has been historically strong support. That being said, I think we can play for further Kiwi dollar weakness until we see signs of a tradable bottom forming. In the Australian dollar, it's a little bit different. You can see we broke through the support and there's just nothing underneath. So what happens when you have a situation like that? Well, I like to look at Fibonacci retracement levels. So right now, I would say there's support in this basket around 72.47, which would bring us back to where we were trading in May 2020. And then the 61.8% retracement level, which would bring us back to April of 2020. So I'd say definitely looking to short the Aussie dollar on any rallies. That is my strategy with the Aussie, same with the Kiwi. Not too dissimilar with the Canadian dollar. The Canadian dollar is also looking a little bit wretched. Okay, so what's going on with the loonie is pretty interesting. We busted out of this inverse head and shoulders that I pointed out back in May, so quite some time ago, and then we reached the head and shoulders target, pulled back, pulled up, and now I think we're ready for the next leg down. As we drop down into our intraday timeframes, looking at the 4-hour chart, this rally looks very constructive to me. In other words, I believe this rally from the lows of July is eventually going to roll over and break down. Counter trend price action is almost always contained within either a set of parallel lines or converging trend lines, and you can see that these trend lines are converging nicely. I'd be looking for a break below the support line of the structure, and then I'll be looking for my chart patterns that I use to enter the trade in order to find a short trade worth taking on the Canadian dollar. All right, so the pound is defying my expectations beautifully. Always fun when the market doesn't do what you think it's going to do, right? Raise your hand if you've been there before. All right, so if I have to put my forecasting hat on with the pound, I still think this move ultimately fizzles out and we're going to get a reversal for the ages. Whether that's going to happen now or not, and by now I mean imminently now or not, is definitely up in the air. I'm on high alert looking for a reversal. You can see here on the daily time frame, the relative strength index is quite overbought. On the monthly time frame, it's overbought, and on the weekly time frame, it's overbought. Now, overbought does not mean over. So just because my momentum indicator is saying that something's overbought does not mean I'm going to short that currency pair immediately. We still need what I call confirming price action. So what is that? Well, let's establish some parameters here. So parameter number one, I'm going to draw this channel here. You can see how this channel's done a good job containing all the rally in this basket since Feb 2023. So I'd be looking for a break below the lower boundary line of this channel. That would be a great initial indication, that the pound strength is over. Unless we get very clear trend continuation patterns, I'm not too interested in looking for reasons to be long the pound. Okay, the euro. All right, so the euro's interesting as well because we've broken above resistance and we've now touched into the next resistance level, and that's pretty much where we are right now. So that next resistance level is the swing point from August 2020. You can see we're struggling against it. If we break above this swing point, then we're headed all the way back probably to the highs of March 2020. On the other hand, if we break down, which is what I wouldn't be shocked if we start breaking down, by the way. So I'm going to add a midline to this channel as well, and you can see we're right up against the midline of that channel. Make that blue as well, just so you can see it. So you can see we're right up against the midline of that channel. So what does that tell me? Well, it tells me that the euro is likely encountering some pretty stiff resistance, and I wouldn't be shocked based on what I'm seeing in the daily RSI. Look at this bearish divergence here. If we rolled over in the euro as well. I still don't see too many good trades to short the euro, but this is definitely a currency I have my eye on, and I'm considering it as being vulnerable, similar to the pound. All right, the Swissy, we're in uncharted territory as far as the baskets are concerned. As far as the baskets are concerned, we've made new all-time highs, and we could just continue going higher. Eventually, yes, the Swissy is going to fall apart. I'd imagine that the SNB, the Swiss National Bank, is feeling very nervous about a strong Swiss franc. Can't be good for their exports. Are we in intervention territory yet or not is the question. Look, things are overbought on every time frame, daily, weekly, monthly, but like I said, that doesn't mean over. So watching the Swissy, watching for signs of a reversal, and also watching for signs of trend continuation. I'm very agnostic on the Swiss franc. All right, US dollar. Clearly there is some resistance up here, and the dollar is struggling to break through. On the daily time frame, the dollar is overbought. On the weekly time frame, it's not, and on the monthly time frame, it's not. Does that mean we could get a little bit of a pullback here before the dollar heads higher? Yeah, absolutely. I'm pretty agnostic on the dollar as well. We've had a very nice run, and I think we do need to take a breather. So immediately, I'm pretty agnostic on the dollar. I can see us trading sideways, getting that pop out, or I can see us just failing and rolling over. So the dollar is one to watch. It's in the right part of the price chart as far as the basket's concerned in terms of looking for high probability trades, even though I don't necessarily see a clear-cut one right now, and the yen is a very similar proposition. Okay, so to wrap things up with the yen, if I'm looking at my Fibonacci retracement levels, there's a couple ways to measure this. One measurement says we've reached 88.6%, which is a Fibonacci level, and the other is 78.6%. We're splitting hairs. Let's go down to a lower time frame, see if we can't figure anything out. And lo and behold, we have an inverse head and shoulders bottom. This isn't the most textbook formation I've ever seen for this pattern, but it charts fairly well. We got a nice breakout candle here. Given the risk-off mood in the markets, I'd be willing to give the yen the benefit of the doubt here and look for some long yen setups. Might finally be time. The yen's been weak for so long. And I'm going to stick my neck out here for a minute and say, eventually, when the yen does strengthen, which it will, eventually, that is going to be one of the most epic currency trades of all time. All right, that wraps up currency analysis and possible trades. So in conclusion, as always, just play relative strength and weakness. Focus on the basket analysis I just took you through. Always focus on proper position sizing. And of course, make sure you're always following your trading plan. All right, that's it for me, traders. Thanks a lot. See you next week.